let's talk about Greenpanel Industries. The company reported a weakish performance in the fourth quarter. That's because export volumes declined. The company did that on a conscious basis. And we have the domestic sales realization also lower due to competition activity and price cuts that the company has taken as well. Mr. Venkatramani, who is the CFO of the company, now joins in to give us more details about the plans of the business going forward. Thanks a lot, Mr. Venkatramani, for joining in. It's been a tough period for you, right? I mean, raw material prices are increasing. There is supply coming in from both domestic players and imports. At the same time, demand is a little muted. The question then is, what exactly are you seeing as an out of this going forward? I mean, as we start a new financial year, would you have any inkling of when we see recovery and what could that recovery be in terms of volumes for both your MDF and plywood business?
Good afternoon. Yeah, you're right. It's been a challenging year, and we expect the challenges to continue in the current financial year. The only saving grace I would say at this point of time is that domestic demand has been fairly good. We grew our domestic volumes by about 23% in quarter 4. And we are targeting 18% volume growth in the domestic segment for the current financial year. But otherwise, yes, you're correct. We have been, forced to react to competitors' pricing actions, and inflation has been fairly strong on wood pricing.
Okay. So give us a sense in terms of what was the key reason for the demand environment or the environment to change for you. You have mentioned multiple, and why do you see it probably continuing? Why are there no active changes being taken by the company, say when it comes to competitor pricing or production, in order to combat these challenges?
See, last year we saw an increase of about 40% in domestic capacities, and imports went up by almost 100% over FY23. So those had significant impact, on both volumes and pricing. But we went out aggressively in quarter 4 to ensure that we did not degrow in the domestic segment. We had about a 1.8% growth in domestic volumes for the full year. But yes, we had to react to competitive action on pricing, and inflation on wood prices has been fairly strong, primarily because there was low plantation activity during the COVID years of 2020 and 21, and that has impacted wood availability this year.
Right. That 18% target that you gave was domestic MDF volumes for FY25, right?
That's correct. 18% growth in domestic volumes and overall growth of 15% for the MDF business.
And realizations, how do you expect that to pan out? Because volume growth, while it's not a problem for domestic business, if realizations come off, then the net benefit is virtually nil.
Yeah, I agree with you, but it's very difficult to judge what could be the pricing action during the current year. We are not expecting any improvement in pricing, considering that a couple of more capacities will get added in the current year. But in case we have to, take further steps in case competition reduces prices, yeah, we would also be forced to, take similar steps.
Okay. For the coming quarter or whatever visibility that you have, are you expecting a revenue and profit decline, or are you expecting maybe a consolidation in terms of numbers?
See, I think we are not expecting any revenue degrowth. I think for the full year FY25, we would be expecting a positive growth in revenue. But considering that inflation has not stopped in wood pricing, and there could be further cuts on sales realization because some more capacities are getting added this year. And imports could resume from the month of May because BIS implementation has been postponed for a year. So yes, there could be further impact on realizations and margins.
So what does that do to your margins? I mean, I'm just trying to figure out at what realizations, the business is viable, and at below what realizations would you start to make operational losses? Because, I mean, while realizations are coming down, you're not even utilizing your capacity as much because of the glut in the market.
Yeah, that's right. We made a 16.5% margin in MDF during Q4 at domestic realizations of around 29,000. And considering that we are targeting 18% volume growth in the current year, I think I would expect margins to be similar to Q4 levels for the current year. But yes, if there are further disturbances on the pricing side, we could see further impact on the margins.
Okay. Now, coming to this Capex that you have, where does it stand in terms of this incremental Capex? Are you probably putting it on hold because of, the sluggishness in the base business?
Not really. It's on track to start commercial production in Q3 this year. And, considering that it's a different segment, the entire capacity is planned for only thin MDF, and most of the volumes of thin MDF are imported. We do not envisage any delay in project implementation.
All right, final question then before we let you go. You have said that you are looking at increasing your proportion of value-added products as a measure to counter this activity in the industry right now. Where does it stand at right now, and how much do you envisage it to be by the end of this year?
I think it should be stable, because we are targeting 18% domestic volume growth. I don't see any improvement in the value mix. So I would expect it to be stable at the current levels.